All right, quick video about supports resistance and things like that. Because Joey was asking, and I've actually tried to make a document before, um, pretty much in written form, trying to lay out, how to hit support and resistance. So I think it's one of the things that, everybody comes into the market trying to use indicators and throwing a bunch of stuff together. And support and resistance is by far the most important in my opinion. It should be the first thing that we learn. We try to trade rather than throwing a bunch of indicators at it. And so the particular example that we went through before was Uniswap because, Joey threw a chart together and I kind of critiqued it a little bit. And so what I'm going to do is go through this fresh. So, okay, so Binance is the one that I've been charting. Let's just go to, let's use a Coinbase one. All right, so this is what I've been looking at is Uniswap. And so if we were to just go and do support and resistance, I want to kind of go through one, how to hit them on any level, but the most important ones is, let me use the exact words that were thrown on Discord is, how do you determine what major resistance is versus noise? How do you find those major reversal change kind of pivot points? And so for that, my answer is going to be that means by default you're looking at larger time frames. You're looking at the bigger moves for the most part. And so the first thing I'm going to say is we're going to go, real far out. Let's go to 1 day charts. Oh, what is that? Where's the rest of our data? Let me see if there's a different Uniswap quick that's a little better. See a few coins goes off further. Okay, no, they're the same. So back to Coinbase for that. All right. So if we go to day chart, the quickest way to hit supports and resistance is to immediately just look at highs and lows. Don't try to hit all the little tiny moves that are in there. We'll go to a day chart and let's go to our relevant data. And so what are we looking at here? What kind of time frames? So we're looking at 230 days of data here. So this is super relevant. And so let's just mark our big pivots. First is that let's mark our low. So we have our lowest low down here. And remember that these are not just lines like I draw them. They are technically bands. For this exact example right here, I put a line right where I chose it because this wick touches it and these candle bodies close on it. And so I choose, what I consider to be the strongest point of that resistance band, or I pick a spot in it. And so that's our low done. Okay, let's try our high. And so we have, a peak here, a peak here, a peak here sort of thing. All right, so let's start with these two peaks. These two are kind of close, This one's up here, this one's down here. I'm gonna do the same thing. I'm gonna use the candle body close, and I'm gonna use the wick. Exactly what we just did down here, just on the top side. And so we can do the same up here, but because all of this chart data is not, not right in front of us, I'm not gonna use it right this second. And so we have our major high here, our major low here, and now we just have some information in the middle. And so now it comes down to discerning each of those kind of pivot points that we've seen so far. And, for full clarity, I am doing this live right now. I don't know offhand what my other Uniswap chart looks like. This, I'm very liable to make mistakes or go back through this and actually, change one of these if I don't like it later. But we'll start with this. So we have another, a local low here. Okay, let me drop resistance right there. And I see that this, when we just did that, the next thing we're going to go do is look at the local high that was over here. And actually what we just did is that this support that we just put here actually acted as support for this as well a couple times. So we bounced off it in two different spots. So I'm actually liking this, and for the most part, if we are just looking at, the data that's in this band, I would say that we actually just hit the three most critical ones. You can add a lot more to it and get more expansive, but you have to realize you're adding a little bit more noise every time you do that. You're adding more things that you have to keep track of. And so now what we're going to do is I am going to expand on this. This is certainly what we just labeled. I would actually throw in here and say this is our, range high. Oh, got crazy. Mid. And I would call this a low. What we just marked turned out to be almost perfectly range high, mid, low. And conversely, I mean, we could move this line up here where it's using this as support, and it did the same thing over here where it actually turned that to a resistance. I like it down here more for the sake of range high, mid, low, because it is more evenly distributed on these prices. So let's add more. And so there's a couple ways to add more. The first is that, we did the major ones where we said, let's look at all the highs and let's look at, the lows and things like that. And we did the big obvious ones, in my opinion. But to dial in more, what we have to do is, or what I do, is kind of just look at all of your candle closes. Now get a little bit more in the noise and start looking at, okay, where are a lot of candles closing essentially. And so I'm using this as kind of our starting point again, ignoring this stuff up in the corner. And so let's say, okay, I see, right off the bat, we've got 3 candles that closed here. We've already got these marked. We've got this one that also closed here. I'm not seeing a bunch of confluence here. All right, so we've got a little pivot here. Actually, I'll circle this. We have a little pivot there. We use this wick down here, but we do have a couple closes here. We do actually have some closes right up here. And again, I'm circling a ton of data. This is essentially like when I'm looking at these charts, this is what's going through my brain. I'm saying, okay, we have all of these spots, or actually, let me get rid of that one. We have all of these spots to keep track of. We have a bunch of closes down here, a bunch of closes up here. Same thing, bunch here, bunch here. Circle the bottom one, and then all of these I'm just going to put together, and all of this together. And so, redo that one. I mean, this is a ton of information. This is a lot of stuff that we're picking out, and I certainly could pick more. I didn't get any in here. I really kind of cherry picked these a little bit. But what I've just done is basically picked all of the smaller pivots that are happening. Like we can actually pretty much follow this, and almost draw the price action between what I just circled and all of our other support and resistance lines. And so now the question comes down to essentially which ones are used the most. That's kind of just the question. Which ones end up being the most validated, I guess is the word I'll use. And so the one that comes out to me the most, and this is probably just from experience, and maybe it's not as obvious to other people at this point, but it's just practice will get you here. What comes out the most is that I see a lot of chopping happening here, and the price action has been in this one little box for 2 months. And so there's a lot of stuff happening here. And so the one that jumps out is the bottom here. And so let me actually let me just mark it. So if I mark the line here, hopefully it's more apparent when I don't do what I just did. Let's go uni USD. Sorry about that. I hit spacebar instead of alt, and then it went to the next thing. All right, so if I just drop one here, maybe that wasn't as obvious to everybody right off the bat, but hopefully as I get rid of I'm going to get rid of all the lines that just touched. Let's try it that way. So that gets rid of this bubble. That gets rid of this bubble. That gets rid of this bubble. It might not be perfect, but it does get rid of it. Gets rid of this one. It gets rid of this one. And I'm going to say it gets rid of this one only because this is kind of one of those fake out scenarios. There are times where you have to know what data is or is not as important. And this is one where I would just say this one scenario is not important as this touch, this touch, this touch, this touch, kind of a thing. And so hopefully that one that I just drawn there, now that you're seeing it without the circles, let me move the mouse away from it. Hopefully that is, you're looking at it going, yeah, okay, yeah, that's a good line. That's valid. And so I'm actually going to do the same thing right on the other side because this was very choppy here. It's very choppy here. There's a pivot here. And so I'll add one in here. And we'll get rid of all the lines that takes care of. And you notice that we're just clearing out this chart quite a bit. We're clearing out the circles. And so hopefully, again, this one's pretty obvious. Again, it might not be before the fact, but hopefully in hindsight, you're looking at it going, okay, yeah, we hit, let me not circle these again. I just deleted all of that. But hopefully you're seeing how that connects so many of these candles all at one time. And that's exactly the resistance we're running into now, is that exact line. And so let's do the same thing. Let's add another one down here because, I see that we have, this touch, this touch, this touch. I can cross all of those off with one support line right here. Let me get rid of those. And so for the remaining ones, I would say that this line right here, I do like, because we have candle close, like this stopped a pretty big dump. It stopped here. That's pretty strong. And so what I actually want to do is I do want to add a support line because it'll take out these two circles that we just put here. But one other way to think about exactly this, let me get rid of these circles. And this is going to combine ideas. Hopefully this doesn't take it too far or make it too obnoxious of a video here. But essentially, if we look at the support and resistance that I have marked right now that we just did naturally, you notice that almost all of these are pretty evenly spaced. We have a nice gap here, nice gap here, nice gap here, nice gap here. And then we look at it and go, oh, we have a big range here. That would be something that I would actually look at and go, okay, maybe I'm missing something in here. And there's only two outcomes from that. One is that we look at it and go, oh yeah, there should be a support resistance line right here, right where we just talked about. Again, it's not perfect because this is a band, but it takes out all of these. It takes out this as a support there. It's not perfect, but it does, and these almost touch it. This is actually, a super bearish market. This is people front running exactly that. But the other way, the other alternative, let's imagine that these support and resistances aren't here, or that this price action in here, we say, hey, we have a huge gap right here. Maybe I should look better into the support and resistance in this area. Maybe I'm missing something. And the alternative is we actually go to that price action and it looks like this. And we go, oh no, that's a low volume node. The price doesn't have support and resistance there. It gets into that area and just dumps it, which again is not the case for uni, but that is kind of a way of thinking of going about this. You don't have to force yourself to put one right in the middle. Of course, in this case, I would certainly say that this is valid. I do like this one. But we just naturally did uni on a one-day chart. And again, we have 6 lines, and I could certainly rank them. I would certainly rank them in the fact of like the first 3 that we did are the major ones. Or no, we're at 7 now, sorry. The first 3 that we did are the major ones, and the ones that we've just filled in now should really hit pretty much all the pivots. They're really the kind of the levels to hit. Next thing we want to do, get down to smaller time frames, something more relevant, because this is really the way to hit your major ones. And if you were really trying to mark these, like a lot of people will actually go in here, and I probably have them saved still, a daily. So I make it blue if it's one that I mark on a daily. And this is something that I do on some charts and not all of them. It kind of depends on what I'm charting and what I'm trying to get out. But essentially, in this case, I would have only marked the first 3 as the daily because it just says, hey, these are the ones that you said are the most important to yourself, like kind of a reminder. And so let's go down. Let's get down into, let's go down to 6 hour. See what we have. And so, you know what? Actually, let's go right down to the 4 hour. Let's get more data because this is something that we look at all the time. We love our 4 hour charts. So just by looking at this, pretty much ask yourself, is this where you would have drawn the lines? And the answer is probably not, is my guess. Some of them probably would have stuck. I mean, you can see that we hit this pretty much perfectly in the 4 hour, but this might have thrown you a little bit more noise here. You might have been a little bit more uncertain about that. This one touch here versus touching here. There's parts where as we go down to 4 hour, we start to get more noise. You see a lot more chop in this area. This is kind of a steady climb and not so much a support line. And so you do lose some of that information when you go down. And so that's why I would say definitely start on larger time frames. But this is technically looking at the same data set that we just looked at on the 1 day. And so what I want to do now is we are going to zoom into just this most recent chop. We're going to go down to like a 1 hour chart and just look at this stuff. Actually, you know what? Let's do it on 4 hour. Whatever we can get that whole data to fit into on a big wide candles, because I like wide candles are fun. All right. So let's blow it up Let's really expand. Let's dive deep into what we're looking at here. All right. And so really what I'm going to do here is just slowly move the cursor up until we see that we're touching a bunch of candles, essentially, candle bottoms. First thing, we have a new macro low on this screen. I'm going to just go ahead and say, hey, we have a low here. This came up, bounced here. Okay. Based on this chart, I'm actually going to add a support line right here because it touches that and that. What this might mean is that this one that I'm holding right now, we might actually get rid of that one because it's not as pinpoint on this chart. And so let me do that. Actually, let me do it a different way. I look at this and I say, hey, we're cutting this in half. We're cutting this in half. Let me take this support. We'll move it lower. So right now I'm just working our way up. Okay, candle here, candle here, candle here, or relative low, relative low, relative low, all here. We're kind of cutting it a little bit. We'll keep scanning. I don't love it yet. Okay, bingo. Here's a new one. So if I put one right here, we take out all of these wicks that are here, all of this. And again, some of them go below it. We have to remember these are bands. I mean, we're taking out so much. On the 4 hour, I would actually say, like on this data set that we're looking at, that one that we just put in is undoubtedly the most important, or the most validated one here. I would actually, like in this chart that we're looking at, this would be what I would label as our mid-range now. This is our mid-range. It's kind of our point of control that's going through here. Let me get rid of that. And this is steady climb. There's a bunch of stuff that's going on in here, I don't really love a whole lot of them, really. If you want to get really down in the weeds, I would probably add one here. But this is here because, we have candles here, candle here, a peak here, a peak here, a peak here, a peak here, whether you want to call it a peak or a summit, change the orientation, that's fine. This kind of takes care of all of this. It's, again, not perfect, but it does take care of a lot of it. Takes care of this. Takes care of this trap, because that's kind of just garbage. And it's close to these. Because remember, big dump. Everybody sold off bearish. It makes sense that they actually didn't touch that. To do this one properly, this is one of the spots where it would certainly be a band. Where to do this, we'd be taking care of this one that's up here. Everything between these two lines would essentially just be filled in. That would all just be a big band of, hey, there's just a lot of chatter that happens here. But I'm not going to put that in here. And so on the 4 hour, this is basically what it looks like. We've just added 1, 2, 3, 4, 5 support lines in here. And we can certainly force more because we have this one here, one here. I mean, we can drop a support line right where the mouse is now. Let's actually go ahead and do that. We'll drop one there. Again, that one's probably the least clear of all of them so far because we are cutting a lot of stuff. We're just saying, hey, this is a spot where, maybe we pay attention a little bit more. But realize how much noisier this chart just got, how much, harder it is to really understand all of the small movements as opposed to the big ones. The further you go in and the more you're trying to cover, you're taking care of you're just taking care of more minutia. And so now let's go back out to the daily chart and see what this looks like. This looks absolutely untradeable in here. And so it's just about keeping things to your own, your own criteria, your own time frame, finding out what works. Because if you have, essentially, if you put this many resistance and support lines on your chart and you zoom out to the daily to make a trade and you go, I can't trade this, then you need to fix it because just having them on there does you no good. It probably does you harm because you're always going to overweight or underweight it, not knowing what to trust. And so, of course, we go back to the 4 hour. This is the data we were just looking at. We can zoom in further and go to a 1 hour chart. And I mean, this can keep going. We can go to a 15-minute. On a 1 hour, boom, I immediately see this one right here. I'll mark it as a different color so we can see it better. Call it an alert. No, it looks like an alert line. I immediately see this. Touches, chatter here, candles here, all these candles here, candle here, candle here. I mean, this is huge on the 1 hour, but this didn't even show up on our 4 hour. And like, that's what's important to keep in mind, is that as you zoom in, different ones become more or less important, and you get a lot more noise. That also means that if you have a daily line, like if this is our daily line, you might get candles that come up here on a 15-minute, and you can't necessarily trust them. You know what I mean? You have to use the right data for the right time frames. So, with that said, let's go back out, and I'm gonna take this kind of full circle, and I'm gonna give one real example of what I would be doing if I was, let's say I'm a 6-hour chart trader, which is pretty close to the setup that I gave for Uniswap. I'm going to go through kind of a full setup of what I made for this. Call that support. And this should ultimately end up being pretty similar to the very first chart I drew. If I'm consistent, this will be the same. This is a good test for me. I'm looking at mostly the data on the right because it's the most recent. Let me just say that. That's why my cursor's over here and I'm charting in this way. I am looking at this stuff over here with my eyes, but I'm following this side with the cursor because this is the stuff that it's the newest data. It's the most relevant. All right, so I see those. Now I'm going to say, let me chart Uni. I'm going to cheat a little bit and just say that, like, I see a low here. I see a potential low. I'm going to cheat a little bit because I know this is the setup that I ended up going with. I'm going to call this one line. That's usually what I do. If I see a low and another low, I will just make a trend line, go, do these fit? And, you know, if it ends up looking something like this, where, you know, there's a bunch of garbage data, then I'm like, I don't love it. This for Uniswap works very well, in my opinion. The next thing that I will do pretty much immediately is I see this one at the top, and I'll go, okay, well, there's a chance this turns into a channel, and so I will just control and make another one to chart up here. But when I do that, I always see if it backfills and checks off anything else. And it kind of works with where this was. And so, like, I do actually kind of like this setup. Let me remake it using the parallel lines because it does just force them to be 100% the same and reminds me that this is a 100% parallel channel. It's a little harder to use this tool, but I also like it because I can use less alerts. I can put an alert on the whole channel itself. So I'm cheating a little bit here by making that, but that is basically the thought process I used, was just saying, hey, let me connect these lower ones and see if these fit. And so now we have our major supports, resistances here. I didn't cover all of them. But the next question is, okay, we're going to make a trade. Let's see where our trade's going to be and essentially, you know, where I want to take profits. And so I'm zooming into the 4 hour now because we're getting closer to, you know, what would be our quote unquote entries for this trade. And rather than me like putting a big support line here, this is just something that I do for myself because obviously, so I have one right under where the actual price action is because that's what it looked like on the 6 hour. Rather than me making another support line and adding a bunch of noise, I will actually use a line and put it where I would call like a neckline of a trade, essentially, where it, you know, it's not a support line that I care about over here, but it's, you know, it's relevant to my smaller scale trade. You know, essentially, if I were to go down to the 1 hour, I would say, okay, you know, maybe this is a double bottom thing, and this would be, you know, where I would make that neckline, just kind of as an example that this yellow line is quite literally support and resistance. I'm just not using it as the gray line because I want to know that it's different. I want to remind myself, hey, this is not the same one. This is the one that I care about on this time frame. And so really what I'd be looking at is saying, okay, maybe we have, you know, dip, dip, dip. And the confirmation that I want to see is I say, hey, this is a bunch of chatter. It struggled to get above this range. It's squeezing between this trend line. It's squeezing between this support trend line and this neckline that I just drew here, the yellow neckline. And so I'm looking at this and saying, okay, what I want to see it's struggling right now with this resistance line that we put here. But what I want to see is I want to see this come up over and I'll buy in. Oh, why'd that go away? I want to see this come over and I'll buy in on this retest or right above it, or, you know, just somewhere up in this area. It doesn't have to be the retest. You can front run a little bit if things are bullish, which, you know, for the time being they are right now. Make these white. And so I will say, we'll call it the safe entry, because that is essentially, hey, things broke up above it, it worked out, things are great. In the worst case, what happens here is you get above it and it drops down here and you get this one red candle that drops right below it and you go, nope, I'm out, I'm closing, because your neckline's gone, and you judge it that way. You don't want the stop loss too tight, but on something like this, you can do that. The secondary, let's say the market pulls back first, and it pulls back here, and it touches this trend line. And if we do look at this, call me crazy, but on a 1 hour, this is not so different from an ascending triangle. And hopefully we see that. And so, bang, what you would have down here, if you were waiting, again, you're saying, hey, I want to see the breakout, and I'll take that, that's fine. What you have down here is your aggressive entry. Hits the lower trend line, all right, cool, we're in. And then the question is, okay, what if it falls under here? Where do you cut your losses? On this particular setup, the way that we have it set up, even this support line right here, it holds this one well, holds. It holds a lot of these pretty well. My stop loss is somewhere down in here. Of course, I don't use them, but this is where I'd be playing it. So you're holding beyond this trend line, because horizontal or diagonal trend lines aren't perfect, but you trust your support here. And you might get a wick. And so I would look at where these wicks even are. And I would actually, like, where I would probably put my stop loss is I would probably go off of this wick right here. Because 1, 2, 3 all stopped above it, and this one did. And so the only thing you're not catching is this big dip here and this huge spike here. And so I'm putting it down here. Sure, you can still get stopped out, but this is the safe spot in my opinion. Otherwise, you're still saying the setup is okay. You still trust it. And so there we used a large 6-hour pattern, zoomed in on 4 and 1 hour to look at the smaller pattern and entry using the support and resistance. And now let's look at where our targets are going to be. And we're going to use our targets, for our support and resistance for exactly our targets. This one right here, target 1. Target 2, obviously the local high is target 2. And we're going to keep going up and doing exactly that until we hit the top of our pattern. And so we have this V right here where this comes up to a V. That's our next peak of any kind. Bang. And the next one. Bang. And so again, this is 4 targets, which is probably too many, but you have 1, 2, 3, 4, or this blue trend line, whatever comes first. And it depends on a lot of other conditions, but we just used 1, 2, 3, 4, 5, 6, 7 support lines, maybe 8 if you want to count the yellow one, to do this whole chart. And so you don't need to make it too complicated. This video is much longer than I expected it to be, but hopefully that real example hopefully helped a little bit.